Welcome to Couchonomics with Arjun. The show aims to unravel the layers of the fintech sector and the rapidly evolving tech startup ecosystem across the MENA region and beyond. I am your host Arjun, and I will be inviting founders, executives, investors, regulators, and other influential stakeholders to discuss and dissect the highs and lows of their own ventures and how they foresee the wider ecosystem evolve. Join us as we celebrate success and the spirit of risk-taking, the candid discussion that goes past the timid question and cautious answers. Welcome to today's episode of Couchonomics with Arjun Singh. I'm your host, Arjun, and today I'm joined by the Crypto Sheikhs. I have Anas and Danosch, who are both co-founders of DAO, who are joining me on the couch. Gentlemen, welcome.
Thank you so much.
I wouldn't exactly call us the Crypto Sheikhs. What I'd say is we are the hosts of the Crypto Sheikhs podcast. And on that podcast, we often host leaders. You know, sheikhs are meant to mean leaders in the crypto space to get insight from them. We ourselves, yes, we aim to simplify crypto for everyday folks. But I don't like to think of myself as a sheikh.
We are fake sheikhs.
All right. I stand corrected, but there's 2 points. A, I ain't getting invited to the Crypto Sheikhs because I'm not a sheikh on crypto. B, for me, you guys are the sheikhs of crypto. So I stand corrected, but welcome to the show. And I hope, as I have this corny statement I have to make, I hope the couch is comfortable.
The couch is great.
Right?
I'm loving this
Can
couch.
I take it with me?
Well, once the show's over. We're actually booked for season 2, apparently. But anyways, gentlemen, we couldn't have found a better time to meet, right? There's all kinds of havoc, carnage, bloodshed, whatever the right word is.
Blood on the streets.
But you know what? By the time this episode goes live, maybe the crypto markets will have recovered.
Well, we're giving ourselves 30 minutes, right? So who knows, right? The world can change in a minute, as they say, right? But very keen, right? Very keen to ask you, right? What's kind of going on, right? So, if I'm not wrong, less than a year ago, market cap for the entire sort of crypto world had hit nearly 3 trillion. Mm-hmm. It sits at about 1.2. I have no idea what the number is today, but that's where it was last night. People like me have lost a fortune. It impacts the confidence of what I call the average Joe investor, right? Who's partly driven by FOMO, partly driven by herd mentality. What's your take on it? What's going on?
Okay, let's firstly start by saying that it's not just crypto that's down right now. It's the entire market, including the stock market, and a series of other traditionally what you would consider maybe not blue chip, but reliable stocks, right? Like the likes of every stock that did well during COVID is close to 70 to 80% down from where it was. So it almost looks like the crypto kind of vibe has breached the stock market as well. But what's the real cause? Well, we're entering a new era in the financial sort of world, right? What happened very recently was the central bank, the Federal Reserve, decided to hike rates up. And in an environment where interest rates are going up because of a largely inflationary world that we're living in, if you just have to, whenever rates go up, risk assets trade downwards, right? Anything, tech stocks, all of these, crypto, which trades consistently with tech stocks, is also going to be trading downwards because people are going to be putting their money into the US dollar, which is, this is pretty standard economics, I think. So I wouldn't say that this is unique to the crypto markets right now.
But is it not? Because I can understand when you talk about the wider markets, which are held by a wide number of investors. We keep hearing about the fact that the whole crypto market, firstly, I don't know, Bitcoin alone sort of forms 45 to 50% of the entire cryptocurrency, so crypto valuation. That there is a handful of people who basically control what's happening in the crypto market, and in effect, they've decided to kind of, I guess, take a short, liquidate, and therefore the whole market's kind of collapsed because of that. Is that not true?
I would say that is true to some extent. And I mean, the same goes, for the traditional financial industry as well. Maybe it's not limited to a very few persons, but even in the traditional financial system, the power is centered to a certain inner circle that basically makes the markets. And you could argue that crypto even more is so, because crypto is currently to a large extent unregulated.
Mm-hmm.
And that opens up for a lot of bad actors. And traditional finance with a lot of money can easily, take advantage of the loopholes that we currently see in the crypto market. And I believe that has happened, but that's not the entire reason for why the crypto market has fallen. But definitely it has contributed to the speed at which it has fallen.
I would say the crypto markets have always operated in sort of cycles. And if you look at where crypto is trading now and where it was in 2020, crypto is up significantly.
Yeah, agree.
Right now, Ethereum trades at close to $2,000. $2,000 used to be the all-time high pre-2020, right? Going back to 2017, Bitcoin had hit $20,000, and then Ethereum hit 2,000. That was a huge moment, right? Now Bitcoin sits at 30,000 and Ethereum at 2. Ethereum's high was at 4,000 and Bitcoin was at 60. So we're down 50% from all-time highs. But I'd say there's several factors at play right here. I already cited the fact that there's a risk-off moment now with interest rates going up. Inflation is we've seen the CPI data, we've seen the inflationary data. We're looking at double-digit or at least close to double-digit inflation in many markets. In that kind of environment, people need cash. People need to sell and go into cash to pay for goods and services, which are going up. So the gold and silver are also down, right? So I would say there's that part, macro. Now on a more micro level, crypto tends to always, as in move in cycles. You have this huge run up, and then it's a blow off top, right? Because a lot of players take profits. There's a lot of hype. It's driven by retail. It's driven by, in some respects, the whole kind of social media kind of aspect. There's crypto Twitter involved. We had a huge run up as well, leading in sort of consistently with the NFT kind of blow up that happened over the course of last year. So there were several different factors that often lead to this huge hype. And then that hype kind of dries down. It's a similar thing that happened in 2017, and you have this dip that happens. But these dips are actually really great because, I know it's painful for some people. For the people in 2017, many of them maybe left, but the guys who stayed are still active right now and they're still building. Bear markets are actually a wonderful period to build great businesses. I think of the likes of Facebook, Uber, Airbnb. They were all built in bear markets. If you look at the 2000, the dot-com burst, right, in 2000, similar great companies were built coming out of that burst. It's part of it. I think you have a Cambrian explosion of ideas. Many of these ideas are actually not executed well, and some of the great ones last the test of time.
So if I just take that thought forward, so the vast majority of the coins will go.
There's going to be a flush. There's going to be coins that are flushed out, and a lot of them will implode because a lot of them were built on a house of cards.
Okay. So 3 questions, and I guess you can choose to answer them in any order you do. So again, for novice investors like us in crypto, and I've been, I think the first Bitcoin I bought was at about 14,000. I've never sold ever. I've also bought at 50,000.
Diamond hands.
Right. So, my logic is you buy, you stay, because to be honest with you, I don't need the cash, so there's no use for me to sell it, liquidate. I don't need to book a profit. I'm somewhere, I guess, at par currently is the way I sit. institutional investors, there was a lot of hype about institutional investors coming into crypto, right? And one expectation was that some of that volatility which existed historically would actually calm down. That's not happened, right? Question one, why? But hold your thought. Secondly, I do want to ask you this question regarding Cathie Wood's argument that Bitcoin's going to be sitting at $1 million. What is it that she sees? Is there something that you guys see similarly? Because how does something which sits at 30,000, goes up to 60, comes down, corrects up? $1 million, what, maybe in 50 years? Or is she talking in a shorter horizon? And so let's start with those two, and then I'll save up the third question.
So I think that if you look at the institutional or the idea that a lot of institutional investors will get into crypto, we haven't really seen that yet. Yes, they have been scratching the surface, they have been dipping their toes, and we have seen some of them get into crypto, but not to the extent that we were expecting. And one of the main causes for that has been that the regulators have been dragging their foot, because a lot of people have been waiting for the regulators to set some clear guidance on how they see crypto. And the SEC is a very slow organization. But I believe that by the time they get around this and they're able to actually regulate part of this industry, you're going to see a huge influx of these institutional investors. Now, will Bitcoin reach, $1 million? I think the average estimate is that Bitcoin in the next 5 years will reach a price of around 300,000. That's kind of the average estimate.
That was a city estimate, if I remember.
Yeah, I mean, it's based on Citibank's estimates. It's based on some of these larger institutions, but I don't. Sorry, what was your other question?
Well, let's talk about this a little bit.
One.
So I'm holding a piece of silver right here, okay, and me and Danosch, we had this moment. So I'm a gold stacker as well as silver stacker, and one day I took Danosch to see my gold and silver stack. Okay,
I'm a platinum stacker.
Oh, nice. Okay, and I pulled out all this metal. It was like, that's a couple kgs. Okay, and he like picked it up in his hand. And he was like, Anas, what the hell's wrong with you? Why are you hauling this around? Like, are you really gonna fight inflation this way? Are you really like this? Is this your store of value? And we both had this moment where we're like, what, this makes no sense. Right? To maybe an older generation, this made sense. But to a Generation Z, to a millennial, I told I used to work at checkout.com. And so I used to work for, the CEO, Guillaume. I told him about this. He's like, this makes no sense. I would never want to, he's from Switzerland. This makes no sense. I don't want to have to insure this metal in some safe. Like, it just makes no sense. The whole concept of Bitcoin.
You buy a gold certificate. You don't have to.
I know, but why not just
or a gold NFT or
why not just buy Bitcoin, right?
Okay.
The idea is it's divisible.
Correct.
It's easily transferable. It's you can store it on a ledger, right? You can you're effectively there are a lot of things that make it so much more effective as a store of value in an era where we are very much tied to what's happening in the digital space, right? Our phones are constantly in front of us, so in some senses we're already in some kind of metaverse kind of experience. The physical metal part, just that was important in a different era, right? In an era without all of these technologies. What's interesting is that if you take a more macro kind of perspective, as the world has developed, the physical assets are now becoming less valuable than intellectual property assets and knowledge assets, right? In the future, the most valuable asset will continue to be IP and human capital. Mm-hmm. These are the most valuable assets coming out of the world. Mm-hmm. The future of the world depends very much on the continued distribution of knowledge assets and intellectual property. This wasn't the case in this gold era, where we were living in a period of manufacturing, the industrial age, which boomed up in the 1800s. Or if we just go back generations, I know people like to cite, well, gold has been here with us for generations. I believe we are in the midst of a tectonic sort of shift in how we view assets. And the new generation coming out, they're not going to buy gold.
No, I get it. I get Bitcoin is software, Ethereum is software, and your human capital and your intellectual property capital converges, right? So I get that point, but what's the rationale for the $1 million, right? That my question is it?
Well, just assume that the whole world requires. Okay, firstly,
yeah.
Assume that in our lifetime, central banks begin to stockpile Bitcoin alongside gold. Then they begin to perhaps lose interest in gold for the very reasons that people don't see it as having that much value. Maybe it might have some value from a manufacturing jewelry perspective, but the idea that gold has value is very much based on it's a social construct proposed to us through generations, proposed to us through our forefathers, right? That it has value because it has always been a store of value. It's limited in supply, supposedly.
It's not,
and it is compared to other things, but the idea is
but it's not finite.
It's not finite.
Yeah, it's not finite, and we should treat it with respect that it deserves because it used to be used as the backing for currency,
and it still is, right? So it still is.
I mean, to some extent in some countries, but I mean, the reason for the $1 million evaluation target is, as you know, Bitcoin, you only have 21 million pieces of Bitcoin. That's the max supply you'll ever have.
I'm hoping that's true.
No, that is embedded in the smart contract. It's
not the smart contract, but in the blockchain.
It's in the contract. Yeah. So it's written there. It's very clear that you cannot mint more than 21 million.
So there's finite.
It's finite. It's finite in supply, and the demand as it increases. There's a very common guy that's called Plan B. Mm-hmm. He has this. What's the model called? Stock to flow model, where he kind of maps out, with the hash rate of Bitcoin and the increase in demand, where does he see the kind of price of Bitcoin going? And if you look at his forecast, they tend to be quite accurate, not to the dollar, but on a macro level, they're quite accurate. And looking at that and looking at what's happening around the world with the kind of power shifting from the US to Asia, the whole kind of political landscape changing, a lot of governments will start to adopt, as the fiat currencies will one after another fail, more government. That's a controversial statement, but I truly believe so. Every single fiat currency that's ever been around has at some point failed, and I think we are very close to the end for some of these major currencies, and people will only believe it when they see it. And when that shift happens, we're going to see a tremendous change in wealth, a redistribution in wealth, a reset of the financial global systems. And that's going to that's going to, hopefully get the Bitcoin price to explode. But we're not there yet. And we could be 10 years away. We could be 5 years away. I'm not sitting here with a crystal ball.
No, nor am I. And I think there are so many ifs and buts and maybes, and it's like a perfect storm that's got to come together.
I think what will determine all of this is it Murphy's law, network effects?
Metcalfe's law.
Metcalfe's law, yeah. A network is just as valuable as its users, right? And crypto has grown from where it was a couple of years ago. I think there were like 10 million users to now almost 500,000 users worldwide. So Metcalfe's law continues to apply very significantly because people are building on top of this. What's interesting about crypto, which is very different from traditional financial money, is that it's programmable.
Yeah.
There's perhaps a dystopian part to this. I think it's actually in government's interest for some form of blockchain-based currency to become adopted because it allows for better tracking, which is not
definitely. A number of countries.
It allows for the monitoring of. It's actually better to monitor money laundering that way. It's difficult to,
especially with countries with large parallel economies.
Money laundering happens in fiat, cash.
Yeah.
There's a huge myth that criminals are using Bitcoin to circumvent the financial systems. But if you look at the actual majority of illegal transactions, it's done in dollars,
Cash.
US dollars.
I agree with you. Let's switch topics related. Terra Luna, right? So, Twitter has exploded in the last couple of days with all kinds of conspiracy theories and what actually happened to the UST. It was supposed to be, I guess, pegged to the dollar. Obviously, I don't understand the science behind it. Something went wrong. But why does something go from $120 to less than $1 in, I don't know, or 2 or 3?
So,
do you have a view on this? Do you buy into the conspiracy theories? Do you have an alternative view on this?
So the Terra Luna episode was a sort of Lehman Brothers moment for the crypto space.
It's a very interesting article, actually, which I read, I think, at the Fortune or the Forbes. But go ahead.
Yeah, it's sort of a Lehman Brothers moment because we saw the first major collapse of a major, you could argue, financial institution within the crypto space. Yeah. Terra Luna was designed to create a decentralized stablecoin built on algorithms. This is very different from
the
USDT or USDC in particular, where there is $1 of actual fiat in your bank account, in a bank account or treasury for every dollar that is issued, and the peg is maintained in theory that way, right? This particular stablecoin
wasn't that stable.
Yeah, you could argue unstable coin. I'll confess I'm not an actual super expert on the designs, but I do know the way it works is Luna. So UST was sort of collateralized by Luna, and if you wanted to effectively get USD, you had to sell Luna to obtain UST. And what sort of happened this past few days is that there was a sort of hole kind of identified which could be exploited, leading effectively to the collapse of the entire kind of foundation. What happened was, USD lost its peg. I'll confess I don't know the complete details of how it was executed, but what I do know is that the exploiter knew that in order to maintain the peg for UST, he could exploit it by requiring the foundation to increase the supply of Luna, right? When the supply of Luna increased, because this was required to try and maintain the peg, this resulted in the Luna coin losing significant amount of its value. So previously, Luna was being burned every time you were sort of obtaining one UST. This burning process led to Luna being a deflationary coin. So over the period of the past year, we saw Luna rise significantly to a top of, I think, $115 per Luna. And that was because so many people were motivated to obtain UST, because UST allowed them to actually earn a very high yield on their Anchor protocol. Mm-hmm. You were able to earn 19.5% yield on Anchor. There's some views that this was largely just some kind of Ponzi scheme. Mm-hmm.
Well, in a way, it was, because it relied on people. It relied on the influx of people to fund the whole blockchain, and then kind of they're using those funds to pay out all of these high yield interest rates. So and there's loads of these protocols out there, and that's why Luna, it was built on a house of cards, and there are some rumors that Citadel and BlackRock went in with how do you say, malicious intent, and shorted the whole market and just popped the bubble basically.
Yeah, so they shorted it. Once they were able to exploit this, I must confess I don't know how they did it, but
there's an excellent essay
on it,
on it actually, and you'll have to excuse me. Halfway through the essay, I got lost.
So did I. But what happened? What happened was, what's important is the inflation in Luna led to they knew that they would have to inflate Luna to maintain the USD peg. So that indirectly caused Luna's price to go down, allowing them to then short Luna. Right? And as they did this, the loss in confidence in UST caused it to lose its peg. So they also shorted UST, right? And were able to make money significantly that way. As soon as the confidence was sort of gone, right? Everybody was selling. Everybody was selling, and it plummeted. And now I think UST has effectively, it's been delisted from Binance.
Well, I wanted to buy it actually yesterday.
Luna, sorry, has been delisted.
Yeah, I wanted to buy. I was like, at $1, why don't you just go and buy it?
Yeah, you shouldn't have. I know several people who put 4, 5, even 6, 7 figures into a Luna at 90 cents, and they lost all of it because from 90 cents it could go down to 9 cents.
Yeah, I think it was at 16 when I was thinking.
Yeah.
Right, but that's the beauty of the ignorant.
And this is also the problem, I would say, in crypto, that a lot of people they see it as a casino. Or to make a quick buck.
Some of these coins
and look, sometimes I'm not gonna lie. I do it sometimes myself. I see a buying opportunity and I don't do my research.
He lost like $2,000 jumping.
Yeah,
into Luna.
I just put $2,000 because
how many dips have I bought? I have forgotten.
Yeah. So and it's pure ignorance.
No, I think we're all learning on the curve. Now, let's switch topics, guys. We've got to talk about ArtsDAO, right? And I really appreciate you both taking out time. I'm fairly confident the audience has really enjoyed what we've talked about, and thank you for that. So, talk to me about the genesis of ArtsDAO. How did you two come around? But before you start, just give us a simple explanation of what is a DAO. And why is it gaining so much sort of, I guess, momentum of interest, right, among the audience or the unaware, as I call it sometimes?
So in summary, what we are building is the next generation of alternative asset management. And we're combining this between two kind of existing concepts: Fidelity, which manages assets generally, and in a sense, Christie's, which manages art. Our thesis is that our view is that NFTs represent an alternative asset class, which people will want to have an allocation to. In a sense, NFTs are now a means for people to buy sort of tokens in brands. It's tokenizing certain types of brands, and you're able to participate in the financial growth of that brand through NFTs. And so we sort of see the NFT space as an emerging new capital market. And we at ArtsDAO are creating a sort of collective that allows people who are members of our collective to participate in a portfolio of NFTs which we believe has long-term economic growth. What is a DAO now? A DAO stands for Decentralized Autonomous Organization. In effect, think about it as like a Reddit group with a bank account attached to it. So imagine a WhatsApp group, which is actually what we're doing. You're part of a WhatsApp group, and that WhatsApp group has a bank account. Now the WhatsApp group can say, look, they've all pulled money into that bank account. So you've got like $5 million in there. And the WhatsApp group says, maybe I'm a member of the WhatsApp group. I say, hey, with this 5 million, we should go buy a yacht. And everybody in the WhatsApp group approves that, yeah, we should buy a yacht. The WhatsApp group then goes and buys a yacht on behalf of everyone in the group. That's what a DAO is, in summary.
So if you can't get that collective buy-in?
Sorry?
Well, there's going to be voting. So a DAO, I mean, it's democratic, right? At the end of the day, it's about a majority vote. So traditionally, if you look at organizations, they usually run quite top down, where you have a board of directors, they give the instructions, the management team then kind of decides and executes, and the rest of the organization follows. But here you kind of have a decentralized approach where you don't have that top-down approach. Someone from below, someone from within the community or organization can actually make a suggestion or proposal that then will be voted on through the community. So you can see a DAO as a vending machine. So imagine an organization traditionally would have the decision making has to be done, by people, and the organization is run by people and human capital. But in a DAO, essentially, it works like a vending machine. A vending machine needs people to operate it, but it's not reliant on humans. So it will automatically notice when the stocks are low. It will automatically collect payments. It will automatically place the orders. And in a DAO, the organization is run through smart contracts. Mm-hmm. So there's a predefined set of decisions that can be that are voted and then executed through smart contracts. I'm not going to complicate it too much, but it is the future of how a lot of organizations will operate. It's not gonna change the whole world, but we do see it being applicable to venture capital. We do see it being applicable to DAOs, people coming together for a certain cause or purpose. And DAOs are an incredible tool to generate, to gather resources in terms of human beings, capital, and drive them forward very, very effectively for a specific purpose or cause.
Let me add to this in one sense. So the companies, right, exist to allocate capital. Right, the traditional company, right? You've got shareholders, management, and employees. Employees, effectively labor in a very Marxist kind of view, is employed by the holders of capital to return a result, i.e. profit. That is the value creation objective of traditional companies. Mm-hmm. This similar concept can be also reflected through a DAO. Mm-hmm. The difference is you own a token. So in our case, we have our Eternal Gates NFT token, where if you buy that, you are a member of our DAO. Mm-hmm. You own a token, kind of like a shareholder, mm-hmm. and you are able to participate in the entire value creation undertaken by that DAO. Right. Different DAOs operate differently, but it's sort of like you're merging the concept of an employee and a shareholder together. In some DAOs, for example, a lot of them operate on Discord right now. You might have this DAO, and it might, let's say, be tasked with collecting a certain type of art, mm-hmm. right? And members of the community, because they're token holders, will be incentivized to deliver resources to the DAO, because they themselves will also be able to participate in the value creation through capital gain or through other dividend maybe mechanisms, so that the DAO itself flourishes, right? We want to create a similar, we're creating something like that here in the Middle East. There's no other operational DAO that we know of. We have built this on the back of a huge community. We believe it's the largest Web3 community now in the Middle East. Many members of our community are significant collectors. They're artists. Many of them are also significant developers, and we are very blessed to have brought them all together under Arts DAO.
So let me ask the question. So arts, is that the category where you're going to focus on, or it just happens to be the name you've chosen?
We have a very generous view of the word arts, because arts covers a lot of things, right? From music to all kinds of things. We felt that captured our kind of values. We came into the space initially with this strong interest in art. Myself and Danosch, we started collecting different types of art on Foundation.
Digital or all kinds?
NFTs, yeah.
NFTs, but also we were both physical. Like we bought physical art separately.
You should
before.
Come over to me. I have a rather large collection.
Yeah, art.
I've been collecting art for 25 years.
Thing is, art is culture.
How old I am.
No, art is culture, right? And
art defines me the way I see it. Yeah.
Mm.
If you have art in your life, if you don't have art in your life, what kind of life are you leading?
Agreed. No, I totally agree. Oh, well, actually, funny you mentioned it, because my wife is actually a graduate out of Christie's, and we actually met at an art event and then since then she's used my bank account quite regularly. As a matter of fact, we should have you over. Then I guess this show was supposed to happen at my house because actually it's a bit of an art gallery.
Oh, wow.
In any case, let's talk a little bit about NFTs, right? Similar story with the NFTs. Trading's down to 92%. I think Gary Vee went on record, or at least in one of his sessions, said 99% of the NFT projects are going to be worthless. Not asking for investment advice, but for, again, novices of the world who are looking to buy NFTs. And I've bought a fair few without actually knowing it. Curiosity, because the way I've always learned is that the best way to learn about something is you just dive head in first, right? And then, you figure out. How do you go about buying? Now, we can all join your arts DAO, right? Or your DAO. And there's a certain amount of, I guess, structure, intellect, knowledge, which comes with it. But if you're not a part of your DAO, and we're, I guess, individual investors, what is it that we're looking at?
So if you look at the NFT space, it's a relatively nascent industry, and it reminds me of the .com bubble, where 95% or even 99% probably of all those companies went bust. Now, similar things will happen in the NFT space. A lot of these projects will go bust, and now, especially now with the whole downturn in the market in the last few days, a lot of these projects will fail. And there are some projects that are going to continue to build throughout this storm and come out victorious on the other side. And those are the ones that actually probably have the most utility. They are building the most interesting projects. And the NFT space has been circulating a lot around profile pictures, these avatars, Bored Apes, CryptoPunks. And I think that over the next few years, and a few years in the NFT space is like a millennium, it's a lifetime. A few months is just 1 month is like 1 year in this space. I think that this boom of profile pictures is going to go bust. But out of that is going to come some amazing technologies. And I think the use case for NFTs is massive. You can use NFTs in fashion. I love it in music. I think it's great. Music is fantastic. Giving back power to the artists with royalties.
You're giving you're giving power to your audience, right? Because if they can participate in the success of the album.
The story I always use is, I'm a big fan of Led Zeppelin. Okay. And imagine
you're too young to be a big fan of Led Zeppelin.
How old do you think I am?
Well, even I'm not a fan of Led Zeppelin.
Okay, so
not that I don't like Led Zeppelin music.
I used to be in a band when I was a kid. And I played guitar for like 20 years.
Okay.
But when I was imagine it's 1963, right? And you've gone to see Led Zeppelin for the first time. Jimmy Page is on stage, Robert Plant. And you're like 10 people. You're like, wow, these guys are going places. I'm going to stick around, right? And over the course of the next 3 years, through word of mouth, guys, check out Led Zeppelin. It's one of the best bands out there. Fast track to 1971, and Led Zeppelin are playing in Madison Square Garden. They've got 1 million people looking at them. They're selling out albums. You, the early supporter, did you get anything out of that?
No. And that's why I love the
NFTs. NFTs tokenize and give you a financial reward, so to speak, for supporting someone when they're just starting out, right? Before everybody knows about them. The Bored Ape Yacht Club, you could argue, captured that at a bigger sense, right? They built a brand, and the earliest supporters made millions of dollars for being there in the beginning. And they rewarded those supporters actively by the release of the Mutant Ape Yacht Club collection. They did, the ape coin drop. They did the dogs, right? And then they also did, of course, the land, other side. They did all kinds of things. And over the course of that entire year, if you had held Bored Apes from the very beginning, you made a significant sum of money. The same thing could be said for Proof Collective, which then led to the Moonbirds. They gave tons of value to the initial Proof holders. CloneX, same thing. We found Artifact early, back in like early last year. We were looking at their digital sneakers. We didn't think much about them, but if you had bought one, you would have been able to mint CloneX for a lot cheaper.
Yep.
And that is now, it went up to like a 16 ETH
I think
floor.
Nike bought them out.
Yeah, exactly, for $100 million.
Yeah.
NFT worlds given out for free initially to people. You picked one up. They went all the way up to like 18 ETH floor. CryptoPunks were given out for free. So the point is, they rewarded early supporters incredibly.
Mm-hmm. Yeah. So
the trick is to identify the right project and be.
So back to your question. I mean, the easiest route. I mean, I'm not gonna shill ArtStyle. Well, actually, I am. The easiest way is to get into ArtStyle and buy the Eternal Gates token, because then it takes all the effort and work out of find the right projects, because we will do the work for you. But if you want to do it yourself, the best way to do it is, one, really study the market. Really spend a lot of time going on YouTube, understand how
this is really tough.
Understand how NFTs work. There's a lot of scams. I mean, the first project that I minted myself, it was funny. I went on OpenSea. I was really excited about the project, and I was just waiting for the drop. As the drop opened up, I was like, oh yeah, I finally got the one piece I wanted. And then apparently I had minted the wrong one, so from a fake collection, and I lost like $1,000. That was my
truly has done the same mistakes.
So that was my first.
Join the bandwagon.
That was my first mint, and I'm really happy I did that mistake, because it forced me to actually understand what are some of the consequences, or what are some of the typical scams out in the market. Because wherever there's money, there's scammers. And for anyone that really wants to understand the space, spend time on Twitter, crypto Twitter, spend time on Discord. Read about the project, understand who's the team behind it, what's the roadmap, is it realistic, can they actually deliver on the roadmap? It's a little bit like a VC, like venture capital investing in a startup. It's the same thing with NFTs.
So tell me, so let's talk about ArtStyle, because we're conscious of time. So how far along the journey are you? Where are you in this journey? What's kind of next, right? Feel free to use this as a sales pitch if it is, or whatever.
No, I'm not going to be too shilly.
Yeah, I'm very keen to understand. Right, I'm very keen to understand. I think Anas and me met at a.
We spoke on a panel.
On a panel.
DIC.
Well, you spoke. I just asked some fairly straightforward questions, which I could cope with. And then I think you and me met at the end of the session, and I said, I'd love to come over and sort of learn a little bit more. If you could spare an hour. We haven't gotten together, but
let's do it now.
But I'm very keen to hear. So where are you on your journey? What's happening right now with ArtStyle? What's sort of the next 6 months?
So can I just share something interesting?
Please.
We actually got our first VC to invest in us today.
Congratulations.
Yeah,
Thank you so much.
Some seed finance. Yeah.
Yes.
So is this a round that you're doing? How much are you raising?
We're not disclosing that.
Okay.
But we raised a decent amount from our first VC today, and we're very proud of that. It's going to give us effectively the runway and cash to build out on our vision. The vision, as I said, is to sort of become a kind of fidelity for the space, where through us we are offering high quality access to NFTs where you don't have to do the work yourself. It's a lot of work to do it. So we're leveraging the hive mind to create a collector's DAO that collects valuable NFTs on your behalf, and also, to return value back to holders as the market does well. We think it's an opportune moment now, because
Anas, just hold on. So if someone wants to participate in ArtStyle, what's kind of the buy-in, if I may call that?
So our NFTs are each being released at 0.49 ETH, which is about right now like $1,000.
So you don't buy into a pot. You buy into every release. Is that
no? So we have a collection of 2,000 NFTs.
Yeah.
They call it Eternal Gates.
Yes.
It's a combination of the word Ethereum or Ether and Eternal, and the gates represent the gates of our community and the gates to the metaverse.
Okay.
And if you hold one of these tokens, it gives you one share of the 2,000, and if you hold 10, that is an equal representation of the total.
Okay. And how does one buy those?
We have a whitelisting process where we're kind of vetting people who are showing interest. We're doing this currently in a sort of private way to keep our community somewhat exclusive, but we're also doing a public sale likely if there is adequate demand.
So someone needs to go to Discord and sign up for your whitelisting. Is that how?
It's not that easy, to be honest, because we have almost 7,000 or 8,000 people on our Discord, and we only have right now 400 people whitelisted. Okay. So we're not accepting anyone, and we're trying to
taken.
No, but Arjun will keep definitely a spot for you. But what we try to do is curate the community, because what we believe is our community has succeeded mainly because it's been highly curated, and people who come to our events, they're like, wow, you guys throw not just the best events, but with such a good quality of people that are really deep into the space or are contributing to the space in one way or another. And the conversations are very interesting between the community members, and the projects and ideas that are being discussed. And there's so much valuable connections being made. It's almost like a private members club for the Web3 space.
It's like a private members club where your admissions card also doubles as a kind of portfolio in a portfolio of assets. So how it works is you own our Ethereal Gates token. You can buy 1 or you can buy 10. There's several people buying larger allocations because they want a larger allocation to the space. We then, that goes into a treasury. On behalf of all our members, we deploy that into a portfolio of NFTs, which will include some blue chips. So imagine you wanted to buy a Bored Ape. Does it make sense for you to buy a Bored Ape yourself? It costs 100 ETH, which is almost $200,000. Yep. That's quite expensive for you. But what if you just wanted an allocation to the Bored Ape with, let's say, $5,000, right? You can do it through us because we'll buy the Bored Ape, right? And when we make a profit on it, let's say we buy it for X price and then sell it for Y at a profit, we will redistribute the rewards back to holders of our token. Yeah. And we'll do this over the period of a year, looking obviously to bring value back to all holders.
And it's very interesting to hear. So it's very interesting to hear you're obviously focused in this part of the world, right? And yet you're sort of growing it, and there's enough interest in this part of the world in the topic, right? And it's happening all organically.
Yeah, I mean, Dubai is the melting pot right now for anything crypto NFT related. Everyone seems like they're moving here. All the big projects are being started. Not all, but a lot of projects are being started out of here, and we are at the right place at the right time to do this right now.
Awesome, gentlemen. I think we've run over time. We could have gone on for a lot longer. Yeah. I really appreciate you both coming down.
Thank you.
And I will take you guys up on your offer and come down and hear a little bit more and learn a little bit more. But I appreciate you guys taking the time, right? So best of luck with Arts DAO and whatever is next, but it all seems quite exciting, right? And I'm sure the crypto market will recover and I'll have a bigger smile on my face.
Absolutely.
Right. So with that, I'd like to say thanks to both Anas and Danosch for coming in, who claim not to be the Crypto Sheikhs, but for me they were today, right? And with that, I'll say goodbye till the next episode.
Thank you very much, guys.